Fantastic. So today, talking with Simon Dixon of BnkToTheFuture, CEO and co-founder of the company. Simon, welcome.
Thanks for having me.
Fantastic. Simon, maybe you can start off by telling our community a little bit about your background, how you got into crypto, and how you kind of founded BnkToTheFuture, the foundation of everything.
Sure, yeah. So I was working in investment banking, and I left in 2006 to write a book called Bank to the Future. And that was on systemic risk in banking, and I spoke around the world on the subject of the problems of banking. That brought me to one lecture where I met a guy who also invited me to. He was an early Bitcoin developer and an anarchist called Amir Taki, and he invited me to speak at the first Bitcoin conference in the world. So that was in Prague in 2011, and I spoke on the difference between Bitcoin and banking, and then that led to the next draft of the book, which was Bank to the Future, which was the first published book in the world to include Bitcoin. And so because we started investing in the industry, and we founded a platform called BnkToTheFuture.com, which was trying to do disruption in venture capital. And at the time, we were in the UK. And we were one of the first companies that managed to persuade the regulators to allow people to invest online in private equity. But we ended up in a 4-year mission to trying to secure global licenses and got different registrations and trying to allow people to invest in this industry. And then around about 2015, we relocated to Hong Kong, set up the company in Cayman Island. Got ourselves registered with the Cayman Island Monetary Authority, and set about securing licenses around the world for various different things. So we have a US broker-dealer and various other licenses. And that was the Bank to the Future, the platform. And so we, through the platform, we were fortunate to do funding rounds in early companies like Bitstamp, Kraken, BitPay, BitPayzer, UnoCoin, and about 100 other of the most valuable companies in the industry. And one of the highlights was supporting Ethfinex in the unfortunate hack situation that happened. And through that, we allowed token holders to convert some of their tokens as a result of the hack, and get Ethfinex equity, and so we're also shareholders in Ethfinex, and that kind of brings us to where we are now.
Fantastic. Maybe before we jump into a little bit more about Bank of the Future, maybe if you could just talk about how you persuaded regulators to kind of allow this to go forward. That sounds like a pivotal kind of a linchpin step in the development of the company.
Well, actually, there was a group of us, and there was no such thing, like crowdfunding had become a thing in the States, but there was no such thing as equity investing online at the time. And so a group of platforms that were all looking to do the same thing in the UK kind of set up an association. And over a period of 3 years, we managed to persuade the UK regulators to do that. And they became the first regulators to support this industry. Several years later, the Jobs Act came around, so US was like third on the list, I think. But everyone knows the Jobs Act just because it was popularized the most. But that was about 3 years after the industry started, and then the world kind of adapted their regulations in order to allow for the investing online, which is really quite funny because when ICOs became a thing after, we were investing in the very first ones like Mastercoin and MadeSafe and Storage and Factum. But when they became a really big thing after we did the Ethereum one as well, and then a few years later, that led to the ERC20 contracts, which just exploded, where Ethereum started to become disruptive to the investment banking IPO industry. Really, regulators were working on this for a long time, and because Bitcoin and crypto is so global, it kind of just jumped in without knowing any of the history of what was actually being done before ICOs. And so we always knew that ICOs would kind of be treated as securities at some point, depending on their structure, and to distinguish them from cryptocurrencies, which are slightly different. And then we always knew at some point the industry would need a regulated way of doing this. And so, we were investing in all the disruption, and ICOs got very disrupted to our model in equity, but we were happy for that. But at some point we knew it was going to come full circle, because we'd always sold these things as securities and done them in compliance with securities laws. As it became more important for the industry, we think that Bank to the Future is a really important part of the ecosystem, because we now have all the structures, and we've been working on them for years, since 2010, to be able to do this in compliance with securities laws. So when we launched the BF token, which recently launched on Ethfinex trading and Bitfinex trading, we did the whole thing in compliance with securities law, but also ensuring that they were utility tokens, because they genuinely are utility tokens. But when we sell them to investors, we sell them as securities. But when they launch on the exchange, they're sold, they're used for the genuine utility, because our platform is live and functioning, and we got a genuine utility and a large user base of 60,000 accredited investors that are started to use this token in conjunction with our platform.
Fantastic. You touched on a lot of the points, but maybe just for anyone that's jumping in now or is not familiar with the token or the platform, maybe just what you guys do, what you guys offer. You're talking about venture capital, kind of access to venture capital kind of returns in the crypto space.
Yeah, sure. So the BF token was, we launched it to solve some of the key problems that we were experiencing. And so one of the first problems we were having is every time we launch something on Bank to the Future, because we get about 50 applications a day, and we're very selective. We only work with about 1% of the companies that pass the due diligence process and kind of are what our investors are looking for. What we essentially, every time we launch something, it sells out very quickly. So we wanted to create a membership token whereby those that have the BF token can deposit them and stake them on the banktothefuture.com platform, and those people get priority access to the deals. And then the non-token holders, if there's anything left over, then they can do that, invest through the platform. The second thing we wanted to do is create a rewards token, because we had this, we went from, because we were here so early, we went from trying to look for the one Bitcoin business that was being funded every 3 months that no venture capitalists wanted to invest in, to a lot of people wanting to invest in the industry, to getting 50 applications a day and every single startup in the world looking to tokenize and kind of join the industry. So we kind of been through that whole cycle, and we saw some overwhelming growth pains around how we actually deal with these this overwhelming applications that are all coming in. So we wanted to create a platform whereby the community can vote more. Kind of what Ethfinex's goal was to create more of a community around what gets listed on Bitfinex. We also wanted to create a community around conducting due diligence and performing more investor relations. And so we got a nice synergetic relationship with Ethfinex, because we do a lot of that due diligence, and we got our rewards token to help put through there, and then we can work with do the primary offerings, and then Ethfinex can do some of the secondary offerings, and you also have a community with your token that you're building there. So it kind of puts people through another due diligence cycle for selecting these things. And then finally, our goal for the end of 2018 is we want to launch a tokenized securities exchange. So this would be not utility tokens that would trade on something like Ethfinex, but actual securities where people can actually pitch just pure investment tokens. And we would launch those in compliance with securities law, and we want to have a secondary market whereby qualifying investors can trade those on our securities token exchange. And so the token is going to be used in order to get discounted trading fees, and when we launch at market later this year. But that's a longer term goal, but we're very advanced along the stages of doing that for the end of this year. So in summary, there's three uses. It's a membership token,
right,
which is a live user case. If anyone purchases 10,000 BFT tokens right now, they can deposit them on their BnkToTheFuture.com account and get priority access to deals. Secondly, we want to launch more of a due diligence process, involve the community more and reward them with tokens for helping us and supporting us in finding the deals to be listed. And then finally, a payment method so they can use it to get discounted fees when we launch our securities token market. So those were the big three problems that we were trying to solve, and the BF token was the perfect way for us to do that.
Fantastic. Do you guys acquire ever any equity stake in an underlying company, or is it always a token that a decentralized company or some kind of firm has created?
Yeah, so we can do both. We can do utility tokens, we can do security tokens, we can do profit shares, we can do equity. And 90% of our deals to date have been equity. So in the example of Ethfinex, that was an equity deal, and many of our others. But nowadays, it's very hard. It's a very rare thing to get equity in a company, especially in our industry, because a lot of the companies has become so profitable that they're not selling equity anymore. They don't need it. They're looking to build communities, and tokens are very good at building communities. And also, because there's no liquidity, investors are more reluctant to invest in the equity because they have to wait for an IPO or a trade sale, and that can often take up to 5 to 10 years if it happens at all. So our goal is to take that equity, tokenize it, make it liquid, so that you can get the best of an ICO, a token sale, with the best of some of the rights of shareholders and securities protections and laws.
To what extent do you feel like the venture capital community has been receptive to what you're doing? To what extent do you feel like you are disrupting the venture capital industry? Are you doing something that's parallel to the venture capital industry? Because you're still acquiring in a lot of cases equity stake in underlying companies. So just your thoughts on how what you're doing is affecting venture capital as a whole.
And the answer is all of the above. So, companies still go to venture capitalists and try and get funding. And we've co-invested with many of the top venture capitalists in the world. So, many of the top venture capitalists have invested in deals, and we've co-syndicated them on BnkToTheFuture, which is useful because they go through their own due diligence process, and we can stick our due diligence on top of that. And they can set the price and do some of the more sophisticated stuff, and we can co-invest at the same price. But when ICOs became a thing, that became very disruptive to venture capital, particularly in 2017, where a lot of now venture capitalists, originally when they started looking at this industry, they kind of laughed at it. But then tokens started to actually get really disruptive towards them. So we recently did a syndicate for the Telegram deal. Now, the Telegram deal is really interesting because that was a lot of traditional money that invested in the crypto space. And what tends to happen once dollars get converted into crypto through an ICO, they tend not to leave. It's a quite sticky industry. So when companies like Telegram, rather than doing an IPO, rather than going to venture capitalists, rather than go into an investment bank, they can raise $1.7 billion through a token. And that all came in US dollars that were then converted to crypto. That is supporting the adoption of the crypto industry. That is disruptive to the investment banking model, and it's very disruptive to Silicon Valley. So Silicon Valley are now, really getting on board. And the first wave of token sales were really quite unethical and dodgy, where the VCs were commanding huge discounts and bonuses in exchange for a riskless trade where they could dump them on retail. And then obviously the SEC started looking into that and clamping down. But now, the venture investors in this industry, we've created our own wave of venture investors, and that is, people that really understand the Bitcoin industry. They got extremely wealthy. It's following Silicon Valley, very similar, where, Silicon Valley was created because a few companies got very wealthy through technology, and then they created their own funds and reinvested it in the industry, and mates all looked after each other, and they all co-invested. And when you get a syndicate of really good VCs investing into a company, you tend to be able to drive the market and make it a success if they're a good team. Well, the same's happening in crypto right now. Because so many people got wealthy from Bitcoin, and then got wealthy from Ethereum, and then got wealthy from ICOs during the boom and some would call a bubble in 2017. you created a next generation, a next wave of accredited investors. And those accredited investors are very wealthy and they hold their assets in crypto and they want to take that around. So you're seeing lots and lots of funds being set up, lots and lots of, but now the industry moves so fast and it just doesn't wait for venture capitalists anymore. If venture capitalists are not moving at the pace that the company wants them to move at, then they're just launching the token and they're just raising it from the community, or they're raising it from this new breed of crypto venture capitalists. And so really the traditional VC industry has to adjust to this, because it's not that they're disappearing, it's that they either adjust to it or they, because there's a lot of competition. Large sums of money can now be raised without venture capitalists. And that increases competition, and that really changes the dynamics of the market. And there's lots of problems with tokens, but there's also some really good things that are coming from that. This isn't a one-way thing. There's lots of scams, there's lots of problems, there's scandals, there's people taking advantage of that situation. But at the same time, some of the things that would never have got funded, like Ethereum is an example, that did not have a business model. No venture capitalists in the world would invest in Ethereum. But it turned out to be Google-like returns and one of the highest returning investments that you could ever have made. And so, that's a really shocking thing for the industry, and really interesting and one of the most exciting times to be around in financial history, because now there's competition amongst these, traditional siloed halos of money. And because, US is such a challenging place to do a token sale, it's actually becoming really disruptive to Silicon Valley, because now everyone's going to Asia and different places, and Silicon Valley has become the worst place to raise funding for someone looking to do a token sale. And so really it's an exodus away from Silicon Valley and away from Wall Street, and Bitcoin is creating disruption in the dollar as a reserve currency, as now, assets are becoming tokenized, and now things are being traded against Bitcoin and Ethereum, and that used to be dollars. The reason the dollar got so dominant is because it was backed by, it was pricing gold and pricing oil, and it had Wall Street and it had Silicon Valley. Well, now there's Bitcoin and Ethereum, and assets are being traded as tokens, and there's disruption in Silicon Valley and Wall Street. So really, this is the opportunity here is not for Silicon Valley, in my opinion. This is David beats Goliath. This is the smaller jurisdictions, the smaller and new breed of people looking to do disruption amongst the people that have got the most to lose, which is the dollar, the Silicon Valley, and Wall Street.
Very interesting. Segueing from that, are there types of tokens that you're more naturally predisposed to investing in based on your background or based on, the team that you have? And the kind of flip side of that is, can any startup potentially launch a token? Is every potential startup tokenizable?
Probably not, but that's where securities tokens come in, because when there is no utility model, when the utility model just doesn't make sense at all, and let's face it, we've shoehorned a lot of things into trying to have utility, as the liquidity just increase in this industry. And that's where securities tokens come in, because now you can do pitch an investment straight up. And BnkToTheFuture can allow you to do that in compliance with securities laws. And, we've been working on the different global securities laws since 2010. We've kind of got, a bit of a hybrid between traditional regulations and compliance versus someone that was involved in the Bitcoin industry since 2011 and understands what it means to be a Bitcoiner. And then at the same time, you've got these decentralized models. So we're really interested in investing in the decentralized disruption that could potentially disrupt us. We have no challenge with that. But in the meantime, securities are not about to be done in a decentralized way, because regulators have used decades and decades of trying to eliminate all bearer assets. But I think there's going to be two booming markets. Just like Bitcoin right now, there's a booming market for KYC, fiat to crypto through an exchange. And there's also a booming market for hardware wallet to hardware wallet via a decentralized exchange with privacy enhancing features. And both of those are booming. And one of them has, a slightly different user experience and the other, but both of them are really important user cases. And we're looking to invest in both. One thing I've learned, from investing in early in this industry, is that sometimes, having too much of an opinion about your investment theses kind of is wrong. So we started believing that the future of finance looks very different from the past. We didn't know what it looked like. We didn't know which companies were going to succeed. So we were diversifying across them all, and just knew that the investment theses of this industry could disrupt traditional finance, which we still believe to this day. Means you've got to be really widely diversified. And that was kind of the reason why we created the BnkToTheFuture.com platform, because we wanted to invest less in many deals. We didn't want to be fully exposed to a couple of deals and try and pick the 10 that are going to win. We just wanted a really diversified portfolio. So we launched a platform where we could find the deal, and people could co-invest with us, and then we'd be like one entity that's a bit like a hybrid between a venture capital institution, but also having lots of different investors with lots of different schools of thought, so that the average investor on our platform has a diversified portfolio of about 14 different investments through our platform. So people are looking to diversify, and I think that's the way and approach to move forward, because sometimes logic doesn't even work in our market. We've got a crazy market. One of the things that tokens did is they kind of took away that model whereby a company either succeeds or fails. Well, in token market, they don't either succeed or fails. We have scams that are still traded that have pumps, and people are still making returns off of trading Ponzi schemes and scams that they know are scams. So a token never dies. Once you put it on the blockchain, it continues. And while an exchange might not list it, a decentralized exchange will. So, it kind of changes the odds of success here. While you can even make a really bad investment, and it can still kind of give you returns based upon the crazy market that this crypto industry is producing.
In traditional VC, it generally takes quite a bit of time for a company to raise a seed or a Series A round. They can talk for months and months, and it requires a lot of face time. How, I guess, on your end, is that changing? I'm imagining deals are global, so you're not necessarily meeting teams all the time. Are they, applying? In terms of deal flow, how is that kind of being managed?
Yeah, so the difference is the numbers are bigger. Traditionally you just had Silicon Valley and a few pockets of venture capitalists around the world, and if you weren't in the clique, you weren't in. Right. You could have had a good technology, and there is a reason for that, because raising funding is, large sums of funding is meant to be hard. The traditional model was you raise a little bit of money with a seed round. You prove what you can do, you raise with a Series A, you raise more, you prove what you can do with $1 million, then you prove what you can do with $10 million, then you prove what you can do with $100 million, then you go to an IPO. That is a good model, but unfortunately, or fortunately, tokens have kind of taken that model and allowed people to raise vast sums of money up front, which causes very, unfundable people are still getting lots of amount of money. And you've got to be wary of those, and you've got to be, really challenging with those. But then at the same time, things that never would have got funded, like Ethereum, gets funded. So, it's when people ask me, are ICOs a scam? Are ICOs, changing the world? Are ICOs disruptive in Wall Street? The answer is all of the above. Right. ICOs are a complete scam sometimes. Right. They're disruptive to Wall Street. They're a new business model that would never have got funded. But the one thing, the common goal here and the common thing is, it's changing finance forever. You can't uninvent this. It's not going back. You can put securities laws on it. You can go decentralized, but the community will figure out what this is going to look like in the end, and you will have both.
Right. Well, so I guess that's my question is, what's the secret sauce? How do you, I guess, figure out what the line is between fundable and unfundable? If in traditional VC, if everyone's in Silicon Valley, it's, you went to Stanford, or you were in Y Combinator, or you part of the same club, so you checked off all these boxes. You did CS. How do you in this space kind of figure out what the boxes should be? And you're saying you continually need to rethink what your investment thesis is.
Yeah, similar things. So if you put a bunch of really good investors around a good team, then whatever their original thesis was, it can come out something good on the other side. So we look for the same thing. We look for other really good investors in this industry, advisors that are willing to put their reputation on the line for it. So one of the challenges today is you've got all these new people that are calling themselves advisors that don't know anything about blockchains, that think that blockchains are databases, and really, raising vast sums of money for something that's not a blockchain.
Right.
And so, I like to see some old school people that have been around the block, pardon the pun, but been around the block for a few years, and they know what blockchains do, what they don't do, and they're willing to put their reputation on the line and become an advisor. So I think, it's similar things, really. You're looking for a bunch of good investors around a bunch of good advisors, around a good team, around a product that seems to make sense. And then at the end of that, you can probably make something that works. You've also got to really look at the economics and token allocation, because you really don't want people to get very rich very quickly and end up just, not delivering the technology because they didn't get locked in, or the economics were not set up right, or VCs were getting too big bonuses that they're going to dump onto the retail as soon as they hit the market. So looking into those economics, lock-ins, motivations, and incentivizing people, that's really important, because you want a team that's going to be at this for 3 years and is going to build something, really incredible that's going to change the world.
Awesome. One of the things I think is interesting about what you guys are doing is it's VC that's opened up to anyone. It's not just accredited investors. Do you guys have a sense of who the general kind of profile is of the token holder? Are they, have they been in cryptocurrency for a long time? Are they accredited investors? Are there, predominantly VCs? Just any kind of sense of who the general person is that holds the token.
Well, so through our platform, we're open to qualifying investors only. And what that means is in every jurisdiction, there's a different definition of who can invest. So, for example, in the UK, a sophisticated investor can be someone that passes a suitability test and has made a minimum of 2 investments. In the US, you have a net worth requirement, you have an income requirement. And so what we've done is we've been through all of these different jurisdictions and created custom onboarding process, compliance process, and local partners in all the different jurisdictions that we mainly focus on. Predominantly, most of our investors come from Asia. At BnkToTheFuture, and we've got very strong relationships in some of the major economies that are investing in these things. But yeah, what we're kind of moving towards is a model for retail investors and a model for accredited investors. And so while originally the token sales were all about democratizing investing, allowing anyone to purchase anything, they soon started to realize that completely disrupts everything that the regulators have ever implemented since the 29 stock market boom and bust and crashes. So then suddenly crypto people realize, there is securities law and it does mean something. And so what tends to happen is you get the accredited investors that are putting up the vast majority of the funds. And then you have to do either a semi-restrictive public sale, which is, for example, at BnkToTheFuture, we raised 30 million from our platform. We did that in 15 hours. And then we did a small public sale, which sold out in 2 minutes and 17 seconds. And what we were doing for our public sale is we were just selling memberships, where you could use the token for membership on the platform and very specific things. And it was restricted to, a maximum purchase of $10,000. And we had specific membership tiers. But what the other models are moving towards now is, rather than actually selling tokens to retail investors, they're just giving them away. So some of our customers are doing airdrops, where they're giving anyone that subscribes and joins their community, the opportunity to get free tokens, but they're selling the token sales out to accredited investors and the equivalent of accredited investors in different countries. So the industry is getting pretty, it's getting pretty sophisticated now. In 2018, I think, is really the year that compliance kicks in. We figure out what models work. Investors are getting more savvy. They're getting more wise. I think we're going to have a second bull market. We've had a real correction, which is definitely needed. We got too overheated in our market. We really needed a correction, but I think we're going to have a second wave this year. And I think we're going to have a much wiser audience, but also, we have these market forces that are driving lots and lots of new people into this industry. And there's going to be some casualties along the way, but as long as people are disclosing in the correct way and investors are getting more wise, the model's kind of evolving.
Kind of took the next question away from me, which was going to be what your kind of theme or kind of driving force for 2018 is. You feel like it's going to be regulation?
Yeah, so 2018 is where the whole crypto industry has realized that securities laws does matter. But that's going to drive two things: complete decentralization, DAOs, and really innovative things that operate completely outside of the traditional financial system. But also token sales, which disrupt IPOs in Silicon Valley and are done in compliant ways under a semi-centralized model with a distributed way of raising funds. And those are going to be the two things. I think we're going to have a second wave of, we're going to enter a crypto bubble again. I mean, personally, I believe that Bitcoin is significantly undervalued. Ethereum, Bitcoin's becoming very disruptive in terms of now small central banks are actually holding Bitcoin as a world reserve, as a reserve currency. More assets are being traded against Bitcoin and Ethereum, making them reserve currencies of assets, and lots of digital currencies. People are entering fiat into exchanges, and then they're keeping them in crypto. So Bitcoin is kind of becoming a reserve of that, whereas Bitcoin's kind of doing a bit of disruption in payments, in savings. Ethereum seems to be doing disruption in IPOs and capital markets. And then we're seeing lots of different user cases looking to solve scalability, privacy, governance, and all the issues that we know exist in this blockchain industry. We're at a very healthy point. Some of the things are completely overvalued, complete bubbles. Other things are completely undervalued, and we have a whole new wave of young people that were destined for, taking on debt, getting jobs, taking on student debt, getting a job, and then taking on more debt, then getting a mortgage was their destiny. And then once they got a mortgage, for the first time in their life, these younger people have actually decided that you can call them speculators, you can call them whatever you want, but they started thinking about saving and investing for the very first time in their life, and their destiny has changed because they had an alignment with these crypto assets. They decided that it was part of something that they were interested in, their values, their beliefs, and they decided to put a small amount of money into speculating or purchasing these tokens and something they were interested in. And now this is a next generation of savers and investors. They're not going to buy gold. They're not going to buy stocks. They're not going to buy bonds. They're in crypto. And because the young generation are also going to get, make wealth in crypto, and then they're also looking at all these different assets that are going to be traded against their crypto, they're looking to diversify and spread that in a more speculative way than traditional investments, because they see this as the disruption of an industry that just isn't meeting their needs, doesn't meet their goals, and a way of actually thinking more global and in line with their values and their beliefs. That's a really interesting time and something we're really excited about supporting. There's never a dull moment in crypto. There's always, there's lots of things, there's lots of pains, there's lots of scams, there's lots of problems, but there's also lots of excitement, lots of game-changing things, and things are going to change the world forever. And that's what we're interested in supporting. Sometimes we get it wrong, but the interesting thing is when we get things wrong, just like Ethfinex, when they experienced a hack, they got it wrong, and we used financial engineering in order to recover the market in a much, much faster way that worked out a lot better for the people that lost money as a result of that hack. And this financial engineering is producing significantly better results in some cases than the people that went through liquidation and some of the problems that we're experiencing with Mt. Gox, which is 4 years on and no solution.
Fantastic. Maybe turning just beyond 2018, just into the future. You'd mentioned the traditional model for a venture-backed company is you raise a little bit of money, you raise a little bit more money, and then you have some kind of liquidity event, whether that's an IPO or that's M&A. I'm just curious how you see, this is probably still into the future, what M&A might look like in the crypto space, what a liquidity event might look like in the future for a crypto project.
Well, actually, the equity in the company is still being subject to M&A. So we're getting at BnkToTheFuture. We've got about 5 companies that have turned out to be unicorns, and all of our portfolio is getting offers from traditional finance to buy them out. We've got a lot of M&A activity happening in our industry, and a lot of things being negotiated right now, and the industry is very interesting. But what is really interesting is their valuations are being bumped by having these tokens and these token economies that work in parallel, where and it creates a really interesting thing. So people are leveraging their token in order to have different valuations and also different payment methods where you can build an economy around your token. And that can be used as a leverage tool for negotiating an M&A deal and increasing the value of your company and in return your token as well. So we're really looking at doing a lot of that. It's a really interesting thing to be able to have that tool available to you. But I think, if you look at something like Telegram's just a great example. Facebook went through the traditional model. And in the end, they have to create a monetizable business model that generates revenues. And so you have this thing where people just hate Facebook now because they had to sell their clients' data in order to create an advertising model. But what I think is going to be really interesting is seeing what happens to Telegram now. So Telegram have got these tokens. They don't need a business model. They just need to generate value whereby the value of the tokens creates some kind of economy whereby the more people use the technology, the more the value of the tokens increase, and therefore it creates a self-perpetuating system where they never actually need to do the thing of selling their customers' data, doing the advertising, and kind of doing an Ethereum, which is something that had no business model, but it created utility. And the people that were involved in Ethereum early on were the ones that got rewarded the most as long as they kept their tokens. And the same can happen with Telegram. Now $1.7 billion has been raised without an investment bank. I think you're going to see lots and lots of more companies following a similar model where they can just focus on building technology, building community, and build the best technology that their consumers can have without trying to shoehorn it into a business model in order to get the returns for the venture investors. That's a really, really interesting scenario, and something that I hope, will make this a lot of this technology work better as this moves forward.
That is really fascinating, especially valuations being kind of more elevated for companies that have tokens as part of it when they're kind of negotiating for M&A. That's very fascinating. On a lighthearted note, I didn't realize that the name of the company derived from it was a reference to Back to the Future. I was watching the video, and how did you guys go about getting the car, the Back to the Future car?
Oh right, so yeah, the original version, some of the original funding rounds that we did, I hired out a DeLorean, and I actually found like an exact replica to the point where the serial number on the engine was identical to the one that used in the actual film. So that was a really fun experience. But the brand came because the book that I originally wrote before the company, BnkToTheFuture.com, it was actually it was fiction and real, where we actually, like in the film, where you have the sports almanac and you went back to the past and you gave it to yourself and then you made some bets that changed your future. We did the same in Bank to the Future. We actually took the banking almanac and we went to all the real historical moments in financial crisis history, and we changed it. We added a bit of blockchain. We did a few things, and we looked back to the future to find out what the actual change was until we had a sustainable financial future and some forecasts of what that looks like with fintech companies. And then what we realized after I wrote the book, we actually wanted to create a bank originally, and in 2010, we wanted to create based around the model that we believed was sustainable, but then Bitcoin came along and created this monetary policy that allows you to own your own money, spend your own money, and is based upon savings rather than debt. And that really changed the game. So we didn't know what we were going to invest in, so we wanted to invest in everything. So we created BnkToTheFuture.com, whereby we could diversify widely. We knew the future of finance looks different from the past. And so that's why we actually created the platform, and we thought, one of the founding principles is people asked me very early, well, how do you pick which types of deals you want to back? And I said, because fintech was kind of being used to support the banking industry. And my answer was, we're not interested in anything that allows banks to commit fraud and crime cheaper using a blockchain. We're just interested in things that actually disrupt the traditional and allow new business models. So we're looking for disruption, not, supporting a legacy industry that allows for the same thing. But at the same time, I recognize that we have a two-tiered world. We have a fiat world where people spend money and it's based upon debt, but we also have an equity world, a crypto world where it's based upon savings and sound monetary policy. that creates a lot of volatility, and therefore you need things like stable coins and traditional fiat money. And you want the two to coexist so that you can get more adoption and more people in. So I believe in a coexisting world, but we're just more interested in the disruption.
Fantastic. Thank you so much for being here. Maybe tell our audience where they can find you on Twitter, your website, any other kind of social media outlets they can kind of find you on.
Okay, so our platform, if you're interested in investing in the industry, is BnkToTheFuture.com. You'd have to qualify as an investor to get access there. If you're doing something disruptive, then please apply for funding. We have a whole team dedicated to looking through these things, and we're getting some more decentralized models of getting the community involved in analyzing some of those deals as well. In terms of me personally, I'm on Twitter at Simon Dixon Twit. Just Google Simon Dixon. I got the twit at the end because Simon Dixon was taken. And then if you Google search the BF token, you can find our white paper and everything about our token and what we're up to as we implement our roadmap this year. And our first user case is anybody that purchases BF tokens. You can get them on Ethfinex or Bitfinex. And if you have a minimum of 10,000 tokens, deposit them on BnkToTheFuture.com, and then you get priority access to all of our deals if you're a qualifying investor.
Amazing. Thank you so much for being here.
Okay, thanks for the interview.
Take care.
Bye-bye.